Hi, this is Dan with Index Option Trading on May the 16th, Sunday. Looking forward to the week that is coming up here. And here is we start off with a chart of SPX. What a brutal plunge we had on Friday. SPX closed at about 1135, which is significantly lower than the 1175. And now we have a downward sloping trend line. This is the trend line that I've drawn here. Anything at the stock market or SPX has to break this trend line and close above 1175, and then this is a 50-day moving average. What I have not drawn here is the 20-day moving average, which is also curving down, and there was a confluence of moving averages and congestion pattern here. A lot of trading took place, and that's where the market failed. Anyhow, we're back and down. This chart overall does not looks very good to me. This is a day Goldman Sachs, which is was had a hearing before the Senate. This is the day criminal investigations were probably announced on Goldman Sachs, and after that the market has never recovered. And amid this, we have debt increase and euro decline and so on and so forth. But here it is, Obama's weekly address asking for the Wall Street reform, which is brewing in the Senate. All of this is making this market extremely volatile and dangerous place to be at this time. With a downward trending trend line, I wouldn't be going anything to do with the longs at this moment, except for the positions that we have or shore them up. Any break, this stock market is the market is just very close to 1100, which is a 200-day moving average, and it's only 35 points away. So it would not take the bears and the people to push it down to 1100 in a hurry. And this market can drop to 1100. There is no resistance here. This is not a resistance. This is just nothing. There is open space here, and the path of least resistance could be down. And it can get here to 1100, and then there may be some kind of a battle between the bulls and bears, and that may take place sometime here. But this gap and retesting the lows that happened on last week or before on Thursday when the market crashed could be in the cards. We just never know. The market may break out here and go up higher, and if it does, surprises everybody, then very good. We will get out of the positions that we're holding and not take any chances. Any longs at this time are not advisable anyway. And with this, let's just take a look at the chart of VIX, and see how the volatility is doing. Um, Volatility has been spiking, and now it just fell back here at 25 and then it's gapped up again at 31.2. So the volatility is very high. As a result, you're going to see a lot of big swings, triple digit moves in the Dow and triple digits here and there. And so it makes it very unsafe to be in this market. The market can move when this volatility is VIX is high, then the market has tendencies to make these triple digit moves, which it is doing all the time. Unless this volatility calms down, comes to black here below the 20 levels here of 22, then we would see some type of stability in the market. And with that said, let's just review one more thing, which is stock of Google. And Google has been also hitting this trend line and bouncing off here, and it has just carved another channel here, looks like, as going sideways. We'll be keeping a watch on this thing and change these positions hopefully very quickly here. uh, it just all depends on the market and how the market is going to be. If the market is bullish, the stock will definitely move. As a result, it's not moving because we have seen what this thing is doing. The fundamentals on the economy, as a side note, are improved. The retail sales are up, the factory orders are up, mm, jobs are being added. Everything is pointing to a good recovery here. But the circumstances that I just mentioned, and you can go to our website and read on those posts why the market is crashing. Those are the factors that is driving this market down.